Yo, what's up? It's your boy Wolf back with another video. This is the part 2 to market structure. So yeah, I kind of want to just jump into it. If you haven't seen the first video, definitely go check it out so you can understand what's on the screen right now. So we're gonna do a little recap. What is market structure? Market structure is the framework. It's the framework of to which you're going to be able to identify where you are in the market. That's why it's important to help you identify: are you in a ranging, consolidating market? You're in an uptrend, or you're in a downtrend? If you're in an uptrend, you'll be able to see these things. It's these are the characteristics. The breaker structure to the upside is making higher highs and higher lows. That's what this is. And of course, downtrend, opposite, breaker structures to the downside, making lower highs and lower lows. And if it's ranging, going like sideways, you see like support and resistance. It's just the area where price tends to keep reacting off of, but it's not making any further movements. It's just staying in, a range, just making generally equal highs and lows. All right, so we got that. So I wanted to go into it deeper. So I'm going to go through different you'll be able to see these market structures on a bigger time frame and a small time frame. Trading in these markets is very fractal. What you see on a small time frame, you will see on, I don't know, like 3-minute time frame, on a like 2-week time frame. I don't know, like you'll be able to see this over and over again. Our goal here is to be able to identify this. Can you identify where what market you're in based off the market structure? So let me just zoom out. Let me see right quick. Okay, cool. We are on XRP. This is crypto. XRP. So let me go to, let's see 1-minute time frame. I'm sorry, this is hour time frame. All right, let me just use this as an example. So let me write this real quick so we can keep this on our screen. We're gonna write the characteristics. If it's in an uptrend, hold on, I don't know what that was. The characteristics of uptrend is breaker structures to the upside, and you can identify and visually see a higher high and a higher low, right? Oh, my bad. Okay, downtrend is the opposite. Breaker structure to the downside, making lower lows and lower highs. If market's ranging, we can identify that when we see generally equal highs and equal lows. That's it. It's as simple as that. Now let's bring this to the charts. Okay, perfect example right here. Because we're marking this up, this is an example of a range right now. You can see it kind of visually, but I'm gonna mark it out because this is important. This is on the hour time frame on a cryptocurrency called XRP. You can see it in the little background. Let's identify what is a ranging market. It is when you can identify generally equal highs or equal lows. We see a high right here. Price has came up to this area for whatever reason. We don't know, we don't care necessarily right now. We can see it, so we're going to mark that up. Boom. Pull it to the side. You see price also hit this area. It broke up, but then it closed right here. So buyers attempted to buy and try to break out of this ranging market. So once you see this, once price did come back, you know what, let me actually do this right quick. Let me go back to replay mode. Oh, I can't even do it on here. Yeah, don't worry about it. We'll go through it. Okay, so we identified that this is the high, current high. Let's say back here, right? This is where a high is. I marked it. I'm like, all right, cool. I'm gonna mark it as a high because in those moments, it's like that's what you see. When price starts to come down, price came as low as is down here. Now, when buyers started to step into the market, price came back up and then it still tanked. When you see that, this or these actually becomes equal highs, I'm staying out the market until I see a break and a closure above the high. In this particular case, when price broke from this high and started to come down, found some type of support, price started to trail sideways, and then buyers tried to come up, it failed, and it came back down to this wick right here. This is where price ended, at least for this little run. This is fine, but I'm still not convinced to even like really place any type of trades, because buyers tried to come back up here and it failed. We see that when price started to come down, it didn't make a equal low, but that's fine, because if we're trying to buy based off the market, right, based off of price action, the market structure, price, at least right here previously, this is the low. Let's just say it came right here, it started to make lower highs, higher highs, lower highs until right here. Then it broke, came down, found some support, tried to come back up, it failed. So I'm like, all right, well, I'm going to wait, because we were previously trying to buy. We're trying to find buys. When price rejected right here, I'm not convinced to take any buys until a true breaker structure, and it closed above. So I identify that these are equal highs, relatively equal highs, because price came up around this area and failed. Price came down here, and price only came right here, which is fine, but it didn't make a lower low. So it's going to go up, it's going to go down, it's going to go up until you see this right here. Once price broke up here, for whatever reason, it could be news, it could be, I don't know, just a surge of buyers, then I'm going to be looking for an opportunity to buy. When I'm in this area right here, I'm good. I don't want to take anything, sell or buy. If I'm trying to trade in here, I'm just trying to find something. Unless you are a range trader, I'm not. So this is how I identify if my bias is to the upside, to basically try to buy and try to find a place to buy in this area. I prefer not to take a trade. It's as simple as that. You eliminate your losses by not getting involved when you shouldn't be getting involved, right? So ever since then, price has just been going up. Perfect. So this is an example of a consolidating market, a ranging market, which was an example that we don't of a range or market we don't want to necessarily be trading in. At least that's not what I'm preaching. As you can see, and this is a good example of a higher high, higher low right here situation. Okay, so uptrend, breaker structure. We see, once again, visually, this is like a uptrend, higher highs, higher lows, etc. This is exactly what we see on the charts. When price shot up, it just basically, at least let's just say in this leg right here, we're gonna call this a leg, right? So from here, and I'm gonna just basically draw out just a general area and idea. We're gonna call this is a leg right here, and this is everything. When price started to go up, let me delete this and let me draw visually. When price shot up, started to do a number like this right here, right? So let's dissect this. You could have like pretty much bought anywhere right here, right as soon as it broke out right here and came back a little bit. You could have bought and then like rolled this up a little bit. You don't know where price is going to stop, but you do know that where price decided to make its move. This right here is just consolidating and it broke up. All right, cool. Then we're looking for opportunities to buy. But based off of market structure, right? Market structure. What makes it an uptrend? It's a breaker structure to the upside. When this happens, essentially, is characteristics of an uptrend. So Price broke here, broke right here to the upside. Price broke right here to the upside, also right here. Yeah, so there's three moves. Let's see. If certain things are not clear, you have the option to change your candlesticks to the line graph. I have yet to go into what candlesticks are, but that's for another video. Okay, so I changed my view to a line graph to properly see, like, in the best way, what is price actually doing, right? So if I take off like every single thing, we see price from down here shot way up, it came down, broke structure right here, came down, broke structure right here, came down, and broke structure again 3 times. So let me put my stuff back on. So as you see, break structure, break a structure, even smaller. Like it doesn't matter like how big or small as far as like the range. Like, did it break structure? Did it go higher? Did it make a higher high, higher low? That's what you want to ask yourself when you're marking your stuff down. Okay, so price came up here. There's a higher high, and technically this is a higher high, which means that these are the higher lows, and this is the low. In these markets, I have a better probability of me winning because I'm going with the trend. But I'm able to go with the trend because now I know that it is trending. This is an uptrend. Stuff like this, you need to be able to identify and see, like, okay, cool, I need to see this first before we even consider a buy. This is an uptrend. This is how it looks when you are trading. Like I said, if you're not comfortable with looking at these candlesticks, especially in the beginning, change it to the line graph. You see these points of reversals right here. Points of reversal. Important key levels. All right. So, oh man, I think I lost it. Let me see. Where is it at? Okay, almost lost it. And this is on an hour time frame. It looks like this on every time frame. It's just on a 1 hour time frame, it just takes longer to play out. On a 1 minute time frame, it happens like very quickly. So, all right, so we're in an uptrend. All right, this is a leg. Let me go back to my candlestick. So this is a leg. We're going to consider this is a leg right here. This is the leg of an uptrend. Right here on the consolidate, this is a consolidating leg. This is ranging leg, uptrend. And now let's go to a downtrend. Now this is on a smaller. This is on. Okay, let me just explain it this way. When price makes a higher high, higher low, higher high, higher low, higher low, higher high, you need to mark this stuff up, and this is the reason why. You see where my higher low is, and let me go to the line graph. The lowest point, it broke structure to the downside. So once it breaks structure to the downside, I understand that now we could be potentially going into a retracement correction. So as we can visually see, this is another leg to the downside. So price is going sideways, price is going up, and just kept going up, and then now it's starting to make a correction. Now it's starting to go to the downside. Now this is a correction, but this I would consider another leg to the downside. Now in a small time frame, I don't want to go to the small time frame right now because it'll mess up like trying to find where this is, but we can visually see it's going down. Right? Let's go to our line graph. We see that this is the lowest point right here. Draw that out. We understand that this is the low right here. Once price started to make lower highs and break, lower highs. They started to make lower, higher lows, and it broke a lower high. Then we could say, okay, this could be the end of a correction. Now, let's go back. Let's remember where we are, right? This is all market structure. You got to understand where you are in the market. So in this particular moment, price is going sideways. We're not trading that. The market's decided to break up. From this point on, we are only looking for buys. We don't care about when it starts to come down, because we know that the probability and chances of us winning with the trade of buying is more in our favor. So this is just a little rally. It's just started going up. Any opportunity here is good for a buy. Once you identify that there's a break of structure to the downside, you just want to stay out. We're not getting into counter trend trading right now. If your bias is only to buy, you would not be trying to find any buys here until there's a break of structure to the upside, out of this little leg. We can see that visually right here. As market broke structure at these points right here, we understand that this is a low, and price could simply, let me just mark this up. So low right here, this is the lowest point. You can see where price was right here, and right here. When price made a higher low, that's fine, but I'm not buying until price breaks up, which it did right here, because price could come even lower and then go lower and then lower. This is why you have to wait. Trading is a game of patience. It's like you have to be able to wait all of this out. If you know you don't have a strategy to counter trend, but we are only trying to keep this simple. And if you're trying to buy, you're going to wait until this little correction is done. How do you know it's done? Because it started to make higher lows and higher highs, higher lows and higher highs. Right? So we know that this is the low. We know that there was a break of structure right here to the upside. Now we could be starting a new trend to the upside, a new leg to the upside. So we identify where the low is right here. Price kept going up, making another leg, higher highs, higher lows. On a small time frame, you'll be able to see that more detail, but this is a higher, in this whole range or rally, it's making higher highs, higher lows, and higher lows, right? Until price started to range. And how do we know that? We know that because price was up here at some point, came back and hit equal lows before going back down. It didn't close above. It tapped into that area, and then let me just go ahead and write it. Equal highs and equal lows. As we see price down here, tap generally. Oh man, I can't even draw it. Okay, you can see where price is. Okay, so price came down here, and price came back down here and tapped once more, and it closed right here. So this whole area is a range. We are not trading that anyway. We are only looking for buys, and we are not going to take a buy until there's a break of structure from these equal highs, to which it did right here. And it just keeps on doing that. So as we can see, like I said, price is fractal. So it's the fact that like it's a range within. I'm sorry, it's a trend within a trend within a trend. It's kind of like Inception. You need to be able to identify. Okay, if you know that this is on an uptrend, what you see right here, right, on a bigger time frame, price is kind of going sideways, whatever, and then it breaks up. Then it comes back down a little bit. Breaks up. This one consolidated. Breaks up. Okay. What happens inside all of these is quite literally doing the same thing. It's like literally doing the same thing. It's creating on this candle, this negative candle right here, Stella's candle. It's doing a small retracement, which is just the same thing as we see right here. Small retracement. Small retracement, and then it starts to shoot up. In this candle is you're going to see smaller. If you go to a lower time frame, it's doing that small retracement, and then it shot up. On a bigger time frame, as we see, it did its little retracement, and then it shot up. So to be able to identify this type of stuff is very important. A trend within a trend. And if you have a bias like to either to sell, you're going to have to look for things and opportunities when you're like in a seller's market. Right now, based off of this, we're in a buyer's market. You shouldn't be wanting to place sales in a buyer's market when it's in an uptrend. That's not what we're trying to do. You're going to, like I said, you want to try to keep your losses to a minimum. You're not going to win every single trade, but if you know where you are inside the market, that's going to help you a lot. So this is market structure right here. This is market structure. You need to be able to identify where you are in the market to be able to make the next decision. This goes with any type of instrument you decide to trade. This is a cryptocurrency. It goes with any and everything. Understand market structure. So let me do this real quick. Let's just say there's an uptrend. Simple. We understand this now. Make it higher highs, higher lows. Let's say price started to consolidate, and then price decides to tank. Right? So if I drew this out, what you see on a small time frame is what you see on a bigger time frame. So this is a high. This is a higher high. Higher high. This was a higher high at some point until you realize it become equal highs, equal lows, until a break of structure to the low side. Once it broke structure down to the lower side, it's like, okay, cool. Market could be switching into a bear market. The only way we're able to identify that is if buyers try to come back in and push price back up. If it does not do that, if it fails to do that, you are now in a selling market. What is the market structures? How you identifying your stuff? Lower lows, broke down. Lower lows, broke down. But in a bigger time frame, excuse me. In a bigger time frame, this is in an uptrend. This is in a downtrend. And if you want to zoom out, price could be making lower highs and then lower lows, lower highs on a bigger time frame. You understand? So this was what it could look like if you're in a bearish market anyway. Right? So as long as you understand market structure, you're going to be good. You're going to be good. You'll be able to trade without using indicators. And as long as you understand which side of the market you're on, you'll be able to place better trades. So yeah, I think this is all I got for this video. If y'all have any questions, just let me know down in the comments, or if you're on Instagram, TikTok, just DM me. Hopefully this, just basically, you'll be able to understand based off of what I was explaining in this video and the last video of what you're looking for to be able to identify market structure. So yeah, definitely leave a like, subscribe if you're new to the channel. If you're a beginner, this is still beginner stuff, but this is my best way of explaining it and how I understand it. And guys, I want you guys to mark this stuff down, mark what you see. We're not trying to predict the future. What is price telling you? Price is going sideways, is going to let you know that, and we can see it visually. It's not going anywhere going sideways. It's not going any higher and not going any lower until it does. So yeah, that's it for this video. I'll catch you guys in the next one. Peace.